Welcome to this week's Cattle Call. I'm Susan Littlefield here on the Rural Radio Network. Outside market influences, stock market kind of weighing in on what we see. So is the cash market. We know there were some earlier bids in the week at steady money. So how much is that going to influence what we see in this week's trade? And the big question, is there enough cattle to go around? We're going to talk about that and a whole lot more today with Brad Kooima. He's with Kooima Kooima Varilek out of Sioux Center, Iowa. So let's talk about the fact that we've got some outside market pressure, what's happening, stock markets. What are you seeing within this trade action?
Thanks for having me on, Susan. I guess let's start with, I got good news, I got bad news. Let's start then with the negative side of the market, which isn't really playing out to be terribly negative, but we have a sharply lower stock market going on here. I mean, S&P's a little while ago down 100. It's been a long time since we've had a 100-point move in the S&Ps. So it seems to be, it seems to be triggered off one major stock that everybody has heard about before, Tesla having some issues, maybe some chatter. Yeah, it sounds like the interest rate change is going to be later rather than sooner, lower, obviously. So that's disappointing maybe to some of the market. And I think maybe just uncertainty and certainly with the political climate that's out there, I suppose there's enough of that uncertainty to go around too. But anyways, usually when we have this kind of an outside market influence, it seems like the cattle are always right there in the front row, right? The first to absorb selling into that kind of a deal. So, I mean, the front month's actually higher, 47 higher, and the back months, even after being 50, 60, 70 lower, are only 7, 10, 20, 30 lower. So I'm kind of proud of it. They're hanging in there pretty good in spite of that outside market influence today, so far anyway.
So far, so good, right? The South had some steady money early on in the week. I know it was like 187 Kansas. Now you're hearing some 188 bids, but it seems like all the activity is in the South.
Absolutely. So far, anyway, this week it is. It's only Wednesday, not unusual for us to wait till Thursday, Friday. And typically, Susan, the longer we wait, often the better it is. That is the case when you have leverage. You and I have talked about that, but it's everything. I mean, the difference between leverage and not having it, and while it's a very fine line, it's a very, very important line. So, as we continue to travel through the north here with a lack of supply, so last week we were 8 over, right? The week before we were 10 over. The week before that we were 12 over the South, So, I mean, could there be some narrowing of that spread? Freight is obviously you can haul cattle, and they're doing that by the thousands, by the way, hauling cattle out of the South and killing them in the North. But I was encouraged, actually, like this morning when I talked around in the South, my impression was you could kind of get fully steady 188 from several different sources, and that was getting passed. So, they're a little more emboldened here this week, finally, to ask for a little more. Last week, the North was either no trade or it was a little bit of light trade at 97 and 8 early. And then if you had a trade last Friday, I suppose it was closer to 96. A lot of us passed that. Thinking that there was no reason we had to take less money when we don't have a very big show list. And by the way, we don't have a very big show list this week either. And the cattle that are on it are not very big. Just to say I've heard any stories of big steers, like sometimes I do this time of the year, during fair time. They're not out there. So a little bit of heat stress coming here again. We certainly had a little heat stress in our part of the world last weekend as well. So slowing some of these record gains down maybe just a little bit. So I think cash will be fully steady in the North too. I think asking prices will hang in that 198 area. And I think as long as we hang tough, we'll be okay by Friday to get a really good shot at that again.
Do you think that's when the North is going to push their cattle? Will be on a Friday trade?
It feels to me like it's so quiet so far. Unless something breaks loose tomorrow, but my guess would be a late Friday trade, and that's usually when the Packers trying to fight it as long as he can, and then finally has to give up and come our way. So the other big issue here right now, the other negative side of the market, if you want to call it that, I'm not sure I do, would be the chatter about kill cuts, Susan.
So I was going to ask you about that. Not enough cattle to go around. I mean, we kind of had that idea, 8-9 months ago, and here we sit.
I like the way you're thinking. The comment about there isn't enough to go around. Yeah, that's my sarcastic, smart aleck answer to people like, oh gosh, I heard a major's going to only kill 32 hours next week, or did only 32 hours this week, and not just majors. There's been some of the regionals that have taken Fridays off here the last 2 weeks, and so. While I don't want to discount it, and while I don't want to completely laugh it off, I mean, this is a function of not enough supply, and particularly a regional imbalance in supply, meaning that the numbers are extremely tight here in the north. And so these packers that are in this neck of the woods are particularly stressed out in terms of being able to procure cattle. So some of this is natural. Now, if we do have a sustained over a long period of killing kill cuts like this, yeah, it will make a difference. Not today, not tomorrow. In fact, as nice and current as we are now, it would take a while, but we need to pay attention to that. Harken back to last year when they slowed the kill up during August and September, and then we had the bearish October cattle and feed report where they found all those placements, which, by the way, where are they? To my knowledge, they've never showed up. They must be elephants by now if they're still on feed. And then we had that big break. Remember that $50 break in the feeder cattle, $18, $20 break on the live cattle. So, when the market's at this kind of a level, there's always something lurking in the background, guys. So, use your head. This is a great time to be thinking about option strategies and stuff like that. Leave your top side open, in my opinion, but let's use our head and let's stay current. That's the deal. Keep selling cattle into this deal, and I think we can keep our leverage longer than people expect.
How much factors do you see? I mean, the weather models, as you and I talk, are fighting amongst themselves. But we're hearing temperature ranges from 90 up to 115 degrees the farther south you go, but still some hundreds in areas of Kansas and Nebraska. Not good for those feedlots.
Well, to me, it's I talked about this with another analyst this morning, and one that's been around a long time, and he's out of the South. There is, he asked me, he said, do you think that might make guys easy sellers, that they want to sell the cattle, get them dead before the heat? And I said, that sounds good, but like in my neck of the woods, you can sell cattle today and they probably aren't going to die for 2 or 3 weeks, so really that is a non-event. It's not a factor because we got to feed them through it. So ultimately, I'm anxious to see the weights tomorrow, because that would be reflective of the first heat spell we had. I would actually have a tendency to think it's probably friendly, because it's going to slow down this. I think the reason the weights are big isn't because we're fighting the market. I think the conditions and the grow has been so good because the weather's been so mild all the way back to March. Okay. So if we, slow those, and those cattle will slow down. In fact, around here last night, I was helping my son with just looking at some stuff. I mean, they were suffering already last night, okay, with no wind and it's high humidity already at 5 o'clock. So I get it. To me, I would have a tendency to maybe take a little weight off the cattle, but we shall see. The guys that always want to be bearish, they'll say, well, nobody's going to cook a steak. Yeah, well, whatever. There's that demand factor, but it's July. This is, to me, the demand is better than it typically is. And then, something we've talked about before is this post-COVID summer where you haven't seen that lag in the demand. Is it because we've learned to cook our own steak outside? I think it's certainly a factor, I think.
Well, one final question for you. Are the feeders kind of feeling the pain of this corn market?
In terms of, I'm not sure if I understand your question, but
I guess just because of the prices. I mean, obviously this corn market's just been fluctuating, and we see some decent movement on the corn, and then obviously a drop in the feeders.
The feeder cattle futures, very much so. I've been watching the videos all week, and the actual cash trade on these feeder cattle haven't backed up much at all. But certainly the feeder cattle futures have had a setback, and I don't think they break very far. I don't know that anybody listening to the broadcast is going to start to panic that corn's too high, even though it just rallied 20 cents. We're talking about a market that, relatively speaking, the last 3-4 years is really down there a long way. So as somebody that raises corn and feeds cattle, I think the whole industry would be better off if corn just stayed at $4 to $4.50. But that rally to $7, kills demand. It is an interesting nuance though, because just talking general in commodities, not to get down a rabbit hole here, but there is some political thought here that you might see an increase in demand for some of our stuff, whether you're talking about cattle or corn or maybe pork, for some of our export partners who are gauging the polls and wondering who, guessing who's going to get elected, and then guessing then what that would mean to their trade status, after January 1. So I think demand, actually domestic demand and foreign demand, I think is actually going to stay pretty salty here for a little while just because of that.
What's the best way for folks to get a hold of you?
The phone number is 712-722-0023, or hit us up on kkvtrading.com.
All right. Thanks, Brad, for joining us. A quick reminder, our commodity futures and options do involve a substantial risk of loss, not suitable to all investors. And that's been this week's Cattle Call on the Rural Radio Network.